Sensei here with another investing video. Today's topic, Tesla's options. What a gold mine of opportunities waiting to be explored. Let's dive in. Tesla stocks is one of the most controversial stock out there. Well, you will find some people believe it's deeply undervalued and others will say it's deeply overvalued. If you go to Google and made a quick search, one of the top sites that will appear is tipranks.com, and if you see the range that people have for Tesla 1 year goal, look at this. It's as low as $22 and as high as $310. That is crazy for 1 year forecast. Come on. But because of this volatility, it generates a great opportunity in the stock option world, as long as you don't mind owning Tesla. So if we go back to Robinhood and we go and open the Tesla stock, today it was actually a very big day, very up day, 6.71% up, which is great. It dropped a little bit in the after hour, but that really doesn't mean a lot. I don't believe the after hour until the next day, unless there was an earning call, which in that case, of course, the reaction will be dependent on the number in the earning call. This is not a video to discuss Tesla fundamentals and evaluation. All I care about here is where is Tesla stocks are trading. It's going up and down within a range, and that making the IV evaluation going up and down like crazy, which we are going to use here to generate a passive income from selling puts. And then if it goes our way, then great, it will expire out of the money, we'll get to keep the money and sell new option. But if it goes into the money, then we will have to option either let it exercise on us, get us assigned, and we purchase the stock for that price and then selling a new calls on it, or we can just roll over the puts. I'm going to show you an example of me rolling over the put successfully for a credit that so far it looked like it's paying off, but of course we're going to see how it turned out at the end. So I have done a lot of trading on Tesla. Tesla is a stock that I feel comfortable trading, whether it's with the stock itself, buying and selling, or the options. Preferably recently with the options, it have worked out several times. I'm only gonna focus on the last few examples that I used. Let's take a look at my current Tesla stocks. Currently, I only own 5 stocks, and I really bought it just to be able to click on them and open Tesla quickly to be able to access the stock options. But if we go down to the option, currently I have a sold put for 180. So to understand the full story for the Tesla 180 put, I have to take you to the spreadsheet to explain it one part at a time. On February 28, I sold Tesla put credit spread 190 over 180, expiring on March 15 of 2024 for 183. At that time, the stock price was at 202. But unfortunately, Tesla stock dropped significantly after that. So at March 15, when the stock's about to expire, so on March 15, unfortunately, the Tesla stocks have been dropping significantly. At that day, it was about 163. So it was deep in the money, and I was about to lose about $850. So I refused to take the loss. So what I did, I sold the 180 put that I bought before for $1,075. That is a credit to my account. And then I roll over the Tesla put from 190 March 15 to 180 January 21st. So with this, I'm not only lowering my obligation to buy the stock if the option exercise on me from 190 to 180. I'm also collecting credit of 145, adding the credit for all 3 of them. Right now I have collected 1373. The stock indeed have bounced, like you can see here, when it was 142, and it have been bouncing to 184. If you look at the whole year to date, and you will see that Tesla stock always move significantly both sides when it goes up and down. This volatility creates a high IV in the option market, which we are trying to collect by rolling over and out, while don't let it exercise and collecting premium. All we need is for Tesla stock to go our direction one time to close the option and collect all the and keep all the premium that we have collected so far. So right now, Tesla's option is actually out of the money. It took forever, and today was really a big day. I was already planning on making this video today, and it just played out to be perfect for me. You know, it's making me look like a genius, but actually it's just a coincidence, you know. So if you see here, it shows the average credit is $22 and it shows that it's 72% positive. But in reality, when I roll it over, you can see here my credit was 145, just like I mentioned in the spreadsheet. And you can see here I bought to close the 190 put for the March 15, and then I sold to open the 180 for June 21st. And you can see here this is how much I paid, and this is how much I received, and this is the net credit to my account. So as you can see, I can pay right now $613 to close this put, while I have already collected $1,373. Even though the stock option worked against me initially, I was able to turn this trade around and make it into a winning. And I'm actually not gonna close the put at this point. I'm just gonna let it run. Since I have this $6, I will consider it as a cushion instead of paying it right now to close it. If it end up all the way to 174, I will get the same deal because I will still pay $6 to roll it over. But if it's anywhere above that, then I will keep more money. And as you can see, each day I will collect the theta from this put, which is $13.50. Not bad for doing nothing while waiting. This was a great example of how you can roll over a trade even if it's working against you, collect a premium and lower your obligation. All you need to do is to choose a stock that you don't mind owning. Let me go back and show you another example that I have just recently closed. So recently I also, when the stock is dropped, I just didn't give up. Like even on May 17, that was way before I found out that the stock had bounces. I also sold a put credit spread similar to what I did here, 150 over 140. So you know, when we say 150 over 140, that means I'm selling a put for 150 and then I'm buying a put for 140 to limit my loss to this $10 between the stock price. Also, this stock worked against me initially, and then later on it's actually flipped, and then I was able to close it for just $8, resulting in 137 profit. If this option would have moved against me, meaning it will have get into the money, I would have probably treated him similar to the first options. Let me take you to the Tesla history and show you all the things that I have just mentioned. This is the $8 option when I closed it on May 6th. This is the 260. So basically this is the put spread, the second put spread that I sold for 260, and then I closed it for $8. That was from April 15 to May 6th. Not bad, not bad at all. You can't really collect this premium normally, but because the stock IV is so high, it will allow you to do so. So this is the first example that I was talking about from my Tesla history. You can see on February 28, I sold this put credit spread. I collected 153, and it was consisting of a buy of Tesla put for 180 and then a sell for Tesla put for 190, resulting in 153 credit to my account. And then if we scroll up, you're gonna see on March 13, that's when I had to roll over because the stock went against me big time. So I bought to close the 190 put, and then I sold 180 put in 3 months. And you can see this one resulting in 22 credit, this one resulting in a 20 point something debit, and at the end I collected 145 credit, and this is after I paid the fee. The fee is very small in Robinhood, so I normally don't mention it. I also went and I sold the put that I had for 1,075, just like I mentioned in the spreadsheet. That was of course a credit to my account. So one final example I want to show you on Tesla before I end this video. I also have sold 3 credit spread, but in this one I took a longer time frame. I took until the end of the year. As you can see, the stock expire on January 17 of 2025. I have collected premium of 11.37 on all 3 of them. These, similar to the rest, have also went up and down. As long as you don't get scared and close it. A lot of people get emotional. Like, I don't know if I'm able to give you my emotion at that time, but it did not feel good in all 3 options that I mentioned so far. When it goes against you, you will see a lot of unrealized losses. And unless you keep yourself cool and you don't act on it and you have a backup plan, then that might get really exhausting and emotional. But with time, hopefully it goes your way. As you can see here, right now it's under my cost. So as you can see here, the total return is currently positive, plus 17.44, meaning it's almost plus 600. That's very good. I can close it right now and collect the 600, or I can leave it open. I am gonna keep it open. I want to collect as much as I can from the $2,817. That will be all for today's video. This is just an example of a stock option that I don't mind owning, that have a high IV that I can always use to generate more income. As you can see, I show you an example when the Tesla price went against me. I was able to roll it over for a period of time and lower my obligation to buy it. Instead of 190, my obligation right now is 180, and that's of course is perfect since the stock option right now is 184. As always, the information provided in this video is for education purpose only and should not be construed as a financial advice. Investing involves risk, including the potential loss of principal, and it's much bigger when you're playing with the stock options. If you find this video useful, please consider giving us a thumbs up and subscribe to the channel. And if you click here, you will see my experience with PLTR over the last few years.